Hi, everybody. This is Peter Schiff. It is Friday, August 16th, 2013. We had a lot of action in the markets this week, quite a bit of volatility. The Dow Jones dropped about 350 points, one of the worst weeks all year. It was over a 2% decline, similar decline in the NASDAQ. On the other hand, gold had one of its best weeks of the year. Gold was up better than $50, maybe 55, 60. It was up more than 4% on the week. Silver shined even brighter. Silver climbed by better than $2.50 an ounce. That was a 13% move in 1 week. The dollar index was off about a full percent, weaker against the euro and the yen, as well as other currencies like the Aussie dollar. If you look at the bond market, big story there. Yields on the 10-year government bond, treasuries, rose to 2.83, and on the 30-year, the yields rose to 3.86. Now, these are still historically low yields, but they're the highest they've been in 2 years, and this is going to be very problematic. But, even with all the weakness in the stock market, oil still managed optimistic on the U.S. economy. You have U.S. stocks down, U.S. bonds down, the dollar down, gold and oil up. Right? That is not a pretty picture. Certainly, if you're Ben Bernanke and you're actually thinking about tapering, how are you going to do that in light of what's going on? Now, I don't think Ben Bernanke, I've said this many times, I don't think he's thinking about tapering. I think he's talking about tapering because he knows he can't actually do it, and he's looking for an excuse not to do it, but he can't come out and say that. Now, does that mean it's impossible that maybe he won't announce some trivial amount of tapering to try to save face if he thinks he has to do that? I think he might, but I think that's very dangerous because the Fed is going to have to do an about-face because any tapering, remember, sows the seeds of more QE because the tapering means we're right going to be less difficult for the Fed, even though, a lot of people are going to begin to call the Fed's bluff as September goes by, October, November, December, and there's no taper. And of course, pretty soon Ben Bernanke is out of Dodge, so it's not even going to be his problem anyway, and I'm sure he'd just as soon punt this ball away and try to run it down the field himself. But let's look at what else happened this week of significance. First of all, look at the earnings. We got earnings from Macy's and from Walmart, right? Very different types of stores, but they both had the same story. Their sales missed Wall Street estimates. Their customers aren't shopping as much. They're not buying apparel or whatever it is they're selling there. And so their stock prices were down. But if the economy is really getting better, why aren't you seeing that at these retailers? After all, we know that earnings were very strong for MasterCard and Visa. We got those a couple of weeks ago, right? People are ringing up their credit cards. They're maxing them out, right? Credit card usage is way up. But obviously, they're the fact that people are using more credit cards but buying less of what they want because they have to buy more of what they need at higher prices, this is what's going on. This is bad news for the economy. And it wasn't just the retailers. Cisco came out during the week with bad numbers. Revenues missed. Stock was down. More importantly, they're eliminating 5% of their workforce. 4,000 people going to be laid off. Now, these are good jobs, right? If you've got a job at Cisco, you're making some nice money. Now, what's going to happen? How are we going to replace these jobs? Well, sure, next time we get the jobs report, in that report, I guess will be a bunch of these Cisco jobs, but it's okay because maybe we'll create 5,000 or 6,000 part-time fast food restaurant jobs, right, to make up for these good, high-paying, full-time jobs that we lost over at Cisco. So you got weak sales across the board. You've got more layoffs coming. Yeah, we did get a weekly jobs number this week that was the lowest first-time claim, I think, since at some point in 07. But first of all, I'm sure they're going to revise this number upwards next week. I mean, only if you look at the headline number. Look beneath the surface, and the beat was because of multifamily. If you look at single-family home starts, they were way down. They're at the lowest level in almost a year. Again, why is this happening? Because people with part-time jobs can't afford a full-time mortgage, even at 4.5%, right? Even at an artificially low rate. So there is more demand for rental units for people who have less income because they have part-time jobs or no job at all, or they're moving in and they have roommates or stuff like that. So this shows you that the housing market is already weakening. Now, the home building stocks have been among the weakest stocks. They actually rallied back a little bit yesterday, and some of them rallied today. Maybe just a short-term bounce. I think the sector looks like it's got no place to go at this point but down. But obviously, the housing recovery these are investors, or maybe we should call them speculators who are buying, not average Americans who are buying homes to live in, because the average American doesn't have 100, 200, 300 grand burning a hole in his pocket that he's going to buy a house, all cash. These are investor speculators. And just because the speculator pays all cash doesn't mean he didn't borrow the money. He just didn't have to get a home mortgage. You see, the more sophisticated players on Wall Street, they can get their money from the Fed. They can get their money first. They can borrow a bunch of money and then go on a shopping spree. So a lot of that money has still been borrowed. It just hasn't been borrowed through a traditional mortgage, which is the way a real buyer would get his financing. But what does that mean, again, about this housing recovery? It's phony. It's speculative. And I think it's already starting to roll over. And think about this. What's going to happen when all these private investors, these hedge funds, when they want in the real estate market, because remember, they don't have a mortgage, but they might have debt, but they start to unload these properties, these prices could get killed. The Fed has got to know that. This whole house of cards recovery is collapsing, and the Fed is sitting there watching the whole thing, knowing that they're expected to taper based on the recovery in housing that they said was real. Remember, even Ben Bernanke said he wasn't worried about rising interest rates and rising mortgage rates because he said he expected home prices to keep rising. And it was the rising home prices that were going to give people confidence and purchasing power. Well, how are home prices going to rise when the speculators don't buy anymore, when the speculators start selling their properties. So he's wrong again, as he usually is. Also, we got numbers even today on the University of Michigan consumer confidence. Now, last month it was like the highest it's been in a few years. It was 85.1, and the experiencing it, but they were hearing about it, and they thought, oh, maybe it's coming. Maybe it's around the corner. Finally, I've been waiting years. But maybe now they're getting disappointed that this recovery isn't taking place. And it was pretty interesting watching all the financial talking heads trying to figure out why the price of gold was rallying so much this week. After all, they were trying to blame the sell-off on the market on tapering. But if people were thinking the Fed was going to take away this punch bowl, well, then why didn't gold go down? Now, they were coming up with all sorts of reasons. They were blaming it on Japan. They were blaming it on Egypt. They didn't really want to blame it on the real predicament. One was that they had a bond auction, and that came out with some of the weakest demand, the most recent Treasury bond auction since, March of 2009. In addition, just this week we got more data that confirmed that the Fed is in, because the economy is relapsing back into recession. Now, even if they tapering is just a down payment on future QE. So even if you believe there's going to be tapering, you want to buy gold because they're going to print more money because they're going to immediately be back in recession. Now, if they never taper and they just keep on doing more and more QE, well, then, of course, gold's going to go up. So I think it goes up either way. Meanwhile, gold is already sold off on anticipation of a taper. So it's buy the rumor, sell the fact. If we actually get the taper that gold anticipated, it's going to rally. But if we never get the taper and it's sold off on the anticipation of something that doesn't even happen, then it rallies even more. But of course, in the end, it doesn't even matter because I know what the Fed's going to do. They're going to do the only thing they know how to do. They're going to print money. They're going to monetize debt because this economy is going to implode. The phony recovery that they created is completely dependent you need more and more drugs to stay high. And in our case, we need more and more drugs, and we can't even get as high as we used to be. That's how big the tolerance is, how much the effects are wearing off. And then eventually, it's not going to work at all. It's not going to matter because the Fed's going to print, and interest rates are going to rise anyway because the bonds are going to tank, the dollar is going to tank, and then gold's going to really take off. Has that environment already begun? Was this the beginning of it this week? I mean, it certainly might be because all the ducks are lining up, right? You've got weak dollar, weak bonds, weak stocks, gold going up, silver going up, oil going up. If we see this type of market action repeating itself, if we see more follow-through next week, we'll have more of an indication that we are at the beginning of the end game. That's all for now. Again, don't forget to keep listening to the day-by-day coverage of what's going on in the markets and around the world. My radio program, again, I do that show, the Peter Schiff Show, at schiffradio.com 5 days a week.